Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 12th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation for a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. That's about it for that. One other thing. Did switch up the charts here a little bit. As you'll notice, I got Bitcoin in there. I wanted to talk about that first off. That's why that's on there. But let's get on with some economic data. First, across the pond, Great Britain, we got average hourly earnings, or average earnings index, came in at 2.5%. That was in line with expectations there. Then over here in the United States, we started getting the CPI numbers, Consumer Price Index. That's what we spend the most money on. That's going to determine whether or not we're seeing some of these higher prices being passed on to the consumer. That creates the inflationary aspect that the Fed tomorrow is expected to raise rates on, but that is to combat inflation. To tell you the truth, we're not really seeing a whole lot of inflation outside of gasoline. So it really is a mandate to protect their balance sheet. And that's my soapbox. I'll stick with it. Anyway, we got CPI came in at 0.2%, expected to be 0.2%. Core CPI, Consumer Price Index, stripping out food and energy products because those are considered to be more volatile. That coming in at 0.2%, expected to be 0.1%. We also got the NFIB, which is the National Federation of Independent Businesses. It's a small business index, came in at 107.8, expected to be 105.2. So as long as the little guy is doing well, that creates the velocity of money. We want to see that National Federation of Independent Businesses have a strong sentiment. That is the way that they view the outlook of the economic picture. As long as that is good, that means the little guys are doing good. That means the velocity money is being created. That generates a good economy. That being said, that's about it for the overall economic data. Like I mentioned, we do have the FOMC tomorrow and a lot of PPI, CPI data coming out across the pond as well. All right, on to the markets. Let's take a look at Bitcoin right here. I threw it up here because I started watching this yesterday and a little bit today, and it was like they came down and hit this basically 3 times. I thought we were going to break through this, not really looking at this being a stopping point necessarily, but really wanting to go and test that full range, if you will. But it seems like it really wants to kind of hold off on this little line in the sand that I drew here, where it bottomed here and it bottomed here. So it very well could slow down here before we start resuming to the upside. I still think that it's got to go down there and test that low before we resume anything. But the markets will try and hurt as many people as it can, as often as it can, and that could be one of those situations where it stops here and then starts going up. That's yet to be seen, but it's something to note for sure. Let's look at crude oil futures. They're moving higher today by about 34 cents. You know, the CPI saying we're not really seeing inflation on energy aspects, maybe giving them room to move to the upside. And it could be a lot of position covering ahead of tomorrow's oil inventory numbers. So we've had a nice sell-off since the last build. We're probably waiting here to see what tomorrow's number brings for directionality. Now, gold slightly in negative territory, but it's still stuck in its range right here, like pinging back and forth above and below 1,300. That is a line in the sand that the bulls will want to defend, but it's right here at the point of control. So there's some comfort in that range right there. So, but it's a psychological number. It's not really a support and resistance number. It's more of a psychological number that creates that support and resistance. And I think that's what we're seeing showing up there in gold futures. Bonds, pretty much unchanged for the most part ahead of the FOMC. I think they've got everything priced in. Today we're going to see some traders and things of that nature are in that field kind of level up their positions. shore it up, put on some hedges, things that strategies around that. That's what we're going to see today, just protection of positions, I believe. VIX is coming off a little bit because the equities are almost unchanged. We've got the Dow Jones up about 20 points. We've been looking for something as a confirmation of a top here. This doji here started looking like it, but it never got confirmed. We pierced above that again, and a little bit of consolidation. Just very messy right now. There's no discernible move happening as far as I can see in the Dow Jones Industrial Average. Now the NASDAQ is trying its hardest to get above the 50 Fibonacci extension and where we had these tweezer tops before. Right here, we're piercing above that. As you can see, we've got a new high in, but it has to settle above there in order for it to be a strong move to the upside. It just has to settle above there to give the bulls any type of solace in a move to the upside. E-mini S&Ps looking very similar to that in the NASDAQ. We were talking about these dojis right here. This one may looked up like a top, but then we got another doji on top of it, which doesn't give us any direction. Another counter-opposing doji, the next trade, which generally signals a continuation pattern. And today, really need to break above that, but it's eyeballing this value area high where the volume's been spent below, so we're getting a little overextended in a sense to the upside, and that has a tendency to slow down that momentum. If we can get above this 78 Fibonacci, I think that'll make it pop a little bit more. Then let's look at the 30-minute chart of the E-mini S&Ps. These are 30-minute candles, back and forth. Not a discernible direction. Overnight inventory maybe got a little bit long, or from all of this long that from before shaking out just a little bit. But for the most part, it's just juking back and forth, low volume ahead of tomorrow's FOMC and some good economic data. I think that it is a day of sector rotation, if you will, in and of that, just to kind of hedge up a position in front of the FOMC. And that's about it for today. I haven't added anything to my portfolio as of right now, just kind of keeping an eye on it. Hasn't had anything really jump out at me. In these slow days like this, it's really hard to add something when you're not getting a real directional assumption. So that's where I'm at right now with the overall equities, just not giving us a whole lot of insight as to where we want to go. All right. That's about it for today. Wednesday. What's today? Tuesday. So Thursday's webinar is going to be on the put calendar. So check that one out. It's a really great one coming out of earnings. We're coming out of earnings right now. We can set these trades up to increase our probabilities of success because we're going to be trading in options that we know volatility is going to expand. How do we know that? I'm going to show you how to take care of all that to increase your probabilities of success in that webinar. So check it out at protraderstrategies.com. All right. If you can't take that, take it easy.